Now, let me actually tell you something. Almost 85 to 90% of people actually lose money in the stock market. Now, I'm not trying to scare you, but this is the reality. So you don't have to be afraid because in this particular video, I'm going to explain to you if you have a capital of just 1 lakh rupees, how can you invest that money into the stock market in 2022 as a complete beginner? Now, if this amount of money was actually invested back in 2020, then the amount of returns which you would have got would have been massive, almost 100%, 200%, or maybe even more. But can you actually expect the similar kind of return in today's date? The answer is no. I'm going to explain to you later in this video why the answer is no. But in simple terms, the last 1.5 years has been an exceptional case. You cannot expect the similar kind of return if you're investing your money today. That is a realistic goal. So in this video, I'm going to break the video into 3 different parts. First part, we're going to understand the logic before investing. Then we're going to go through stocks and companies that you should be investing in, or I personally would invest in if I had a budget of 1 lakh rupees and I'm a complete beginner. And the third part, we're going to look into when to buy these companies or when you should be investing into these companies. So make sure you do watch the video till the end, and if you find this particular video useful, do like it and do subscribe as well. So the very first thing is you need to understand how the overall market is performing. And for that, you look into Nifty 50. Now, Nifty 50 is an index which actually shows how the market is actually performing, whether the market is going up or whether the market is going down. It is just an average of the top 50 companies in India, or the top 50 publicly trading company in India. So it's an indicator. Think of it as an indicator itself, right? When you're looking into the market, you're looking at Nifty, you'll understand whether the market is doing well or whether the market is actually not doing well. Now, if you see a Nifty 50 chart over the last 2 years, you can clearly see there has been a massive bull run, right? The Nifty 50 has actually gone up massively over the last 2 years. But right now, can you actually expect the similar kind of return? The answer is no. Now, why? Because in the last 2 years, the government printed a lot of money because of the entire pandemic situation. Now, when this excess amount of money was there, majority of this money actually came into the equity market, because of which the company's prices start going up, the stock prices start going up as well. Now, at this current point, right now, we are under a stagflation period. Now, what does stagflation mean? Because of the excess amount of money which was actually printed, the inflation is very high. The economy is not growing at a massive pace right now. The unemployment rate is very high. And also, the governments are tapering right now. So what this means is that the excess amount of money which was put in the system, the government is not taking the money out from the system. So because of this entire reason, right now, we are under stagflation period. Because of which, can we expect the similar kind of bull run which we saw 2 years ago or over the last 2 years? The answer is no. So I hope you have actually got a realistic picture that if you're investing your money today, what kind of returns can you actually expect for the next 2 years or for the next 3 years? Now, once you have understood whether the market is going up or the market is going down, the next step is trying to understand which sector to invest in or which stock to invest in. Now, something which is very important is you should not be investing all your money in one stock or in one particular sector. For example, tomorrow that one sector drops, let's say banking sector. If the banking sector crashes, then in that case, your entire portfolio will go down. So it is very important that you diversify your portfolio. You are not relying on one single sector. And how to diversify your portfolio? By looking into how Nifty is diversified. Now, Nifty 50 is actually a mixture of multiple different sectors. There is oil and gas, there is real estate, there is banking, there are multiple different sectors which are involved. So our portfolio as well, when we are designing it, will be kept quite similar to how the Nifty portfolio is itself. Now, if you see over here, the top 4 sectors in Nifty actually contribute to nearly 80% of the overall index. So we will be designing our portfolio also something similar to the overall Nifty market itself. Now, without delaying it any more further, these are the 11 stocks which I would be investing if I had a budget of 1 lakh rupees and I want to invest the entire 1 lakh rupees into the stock market in 2022. Now, I've also given a breakdown in terms of how much money I will be allocating towards each of these stocks, because the entire portfolio is designed quite similar to how the Nifty market or how the Nifty portfolio is designed. Now, let's actually understand why each of these stocks and why each of these sectors have been chosen. Starting with the financial sector, these banks such as HDFC Bank, Axis Bank, they're extremely stable banks. They are one of the strongest banks in India. And if you see their profit and loss statement, their sales and their revenue have actually grown year on year. If you look into CAMS, for example, CAMS is an asset management company. Now, in today's date, when the overall return which you get from the FD is very less, right? you get 5% return from FD, and the inflation is almost 6%, a lot of people are pouring money into the equity market, and they're actually pouring money into the equity through mutual fund houses. And CAMS is a monopoly in that particular space. Looking into the IT companies such as TCS or Infosys, again, these are two companies which have shown a strong growth year on year, and they have a strong profit and loss statement as well. Their sales have grown, their revenue has grown, and definitely their profits have grown as well. Looking into the consumer goods or the FMCG companies like HUL, Asian Paints, again, these are companies which are extremely stable and companies which have grown year on year. Their net sales have grown, their profits have grown, and these companies are actually available at a very affordable, discounted price. Right? The entire FMCG space has seen a downtrend over the last few months because of inflation. So definitely a good time to look into these companies. And finally, looking into the pharma stocks as well, because the pharma industry has been a downtrend as well over the last few months. So definitely would be a good time because these stocks are available at a discounted rate. Now let's actually understand when to invest into these companies. One of the basic mistakes a lot of people actually make is that they actually invest into these companies when the company is going up, or when the stock price is rallying up, they end up putting their money over there. But that is one of the biggest mistakes, because you need to understand when the market is crashing, that's when you actually invest into these fundamentally strong companies. Giving a very simple example, let's look at Hindustan Unilever, a strong company, a company with strong fundamentals. Now, we can clearly see that the company was going up and there was a massive uptrend. But after that, there has been a correction in price. The stock has corrected by almost, if you see, 22% or almost 23% as per the previous high. So the stock is currently available at a discounted price. There's a potential to get good returns from this particular company right now. If you look at Axis Bank, for example, Axis Bank again is available at a discounted price. It is available at almost 17% return as per its previous high. Now looking at the third company, let's look at TCS. Now if you see TCS over here, TCS is currently at its previous high. Now will I be investing into TCS right now? The answer is no. Because if I'm buying at this current price, that means I'm actually paying a very high premium for it. Rather, I would actually wait for the company to crash down. I'm sure the company will have its correction and the company will actually come down near its 180-day moving average. Now, what does this 180-day moving average show? This actually shows the average share price over the last 180 days, right? So if you see, no stock continuously goes up, it goes up, then goes down, goes up, goes down. It's a wave periodic cycle. And similarly, even TCS will come down in a span of next 1 week or 2 weeks or 3 weeks. And that is when I would be investing into that company. So in summary, before you actually invest your 1 lakh rupees into the stock market, or before you invest any amount into the stock market, you need to first understand how the Nifty is performing, whether the Nifty is going up or going down, because that will give you an overview in terms of how the market is performing. Once you check that, then you need to design your own portfolio. You need to make sure that you're not investing your entire amount into one sector or one stock. You need to diversify your portfolio. How will you diversify your portfolio? By looking how diversified Nifty is, and you'll make your portfolio quite similar to how the Nifty market is. Once you have done that, you need to actually see how the fundamental of the company is, whether the company's sales are going up, whether the company's revenue is going up, how well is their profits. Once you have done that particular part as well, then finally you look in terms of the technical chart of the company to understand what is the current price of that particular company's stock. Is the stock trending at a very high price, or is it trending at a very discounted price right now? Once you have understood all of these parameters, only then you will be investing into that particular stock or the company. So I hope you have actually understood how to invest your 1 lakh rupees into the stock market. Now again, this is not a financial advice. This is purely from a knowledge point of view, so you can understand before investing your own money. So make sure, if you found this particular video useful or valuable, or if you found anything valuable in this particular video, make sure you do like it, you do subscribe, and I'll see you all in the next video.